Biden's executive order on crypto is set to change USA's fintech fate. A few months ago, the White House issued an executive order in response to the surge in the scalability of cryptocurrencies and other digital assets. As much as cryptocurrency functions on the central philosophy of eliminating bureaucratic intrusion in financial matters, the executive order presents itself as a positive sign for the fintech space. Instead of creating a digital infrastructure independent of the state, cryptocurrencies have managed to get the state on its side. The executive order by U.S. President Joe Biden, in particular, encourages robust research in the fintech sector to mandate its development further. The Americanization of crypto has become an essential part of America's cultural and financial fabric. The Super Bowl is America's most watched television event, which makes it a hub for commercial advertisements. This year, crypto was the most advertised industry via the Super Bowl platform. The American entertainment icon Snoop Dogg has actively engaged with the NFT culture and continues to promote it. Snoop's Stash Box, which includes one track from the rapper's album, exclusive drops, tickets to the artist's event, and more, has been launched. Snoop Dogg has stated that the musical label Death Row Records, which he recently purchased, will become an NFT label, with the signed artists participating in the metaverse. The USA has closely seen the rise, fall, and everything in between of cryptocurrencies. With an estimated $50.0 billion in realized crypto gains, the United States leads by a considerable margin, followed by the United Kingdom, Germany, Japan, and China. What Biden's executive order means for fintech assets. The executive order issued by Joe Biden consists of well-intended statements such as we must support technological advances that promote responsible development and use of digital assets, and we must protect consumers, investors, and businesses in the United States. New financial assets can generate large market disruptions and economic downturns, as evidenced by the experiences of the 2007 to 2009 financial crisis. In order to combat this, appropriate laws need to be in place. On the topic of legal power to issue a CBDC, the White House has charged the Attorney General, AG, with providing the President with a legal evaluation of whether existing legislative authority exists or new legal authority is required. Although the administrative method described in the text appears to be technical, it is one of the most powerful tools utilized in the order. Other than the recent executive order on crypto, other legislative moves impact the crypto market visibly in the U.S. Bitcoin and Ethereum prices plummeted in the hours after Biden signed the new infrastructure package into law. Both cryptocurrencies had just achieved numerous new all-time highs. Overnight, Bitcoin crashed below $59,000 and Ethereum fell below $4,200. By Wednesday, both had mildly climbed back up. Biden's order supports fresh cryptos like Logarithmic Finance, LOG, and Apollox, APX. This executive order has paved the way for new cryptocurrencies like Logarithmic Finance, LOG, and Apollox, APX, to thrive in the market and ensure the development of the fintech space in the longer run. Logarithmic Finance is a new crypto that functions on the Layer 3 swapping protocol. It is a multi-chain and cross-chain platform that even allows the swapping of NFT''S. With such futuristic features, Log is set to revolutionize the fintech sector. Since its launch, its value has surged by nearly 469% at press time. The recent executive order from Biden's office has all the potential to solidify security in the crypto market, and it would be interesting to see what the next crypto chapter in America looks like. Mike McGlone says $20,000 is the new $5,000 for Bitcoin, but is he right? With the recent Bitcoin price crash has come a number of speculations out of the market. Amateurs and experts alike have been giving their predictions on what they believe will happen going forward. While most have been bearish, the forecast from McGlone is a rather bullish one. The Bloomberg analyst has sparked hope in the hearts of some with his forecast that $20,000 is the new $5,000 for Bitcoin. McGlone took to Twitter to share his forecast for the leading cryptocurrency in the market. Panic had washed through investors when the digital asset had declined to the $20,000 level, tethering just slightly above it. While many believe that this was a signal for a further downtrend to come, some have said that it may have marked the bottom for the asset. In his tweet, the Bloomberg analyst points to the early days of adoption in contrast with the diminishing supply of Bitcoin may prevail. This argument is by no means a new one. The limited supply of BTC has long been one of its pulls for investors who believe that in the end, the scarcity of the cryptocurrency will be what drives its price higher. Mainly, McGlone suggests that BTC is approaching too cold levels, and as such, $20,000 may well be the new $5,000. $20,000 #Bitcoin may be the new $5,000. The fundamental case of early days for global Bitcoin adoption versus diminishing supply may prevail as the price approaches typically too cold levels. It makes sense that one of the best performing assets in history. What this implies is that the bottom of the current downtrend may be in. Looking at the previous bear market, it is obvious that the bottom was clocked right when the price had fallen below $6,000 in the early days of 2022. If so, then there is no further decline for the digital asset from this point. But is the bottom in? Just as one historical movement can tell one story of the Bitcoin bottom, so do the others. Now, it is known that the last bear market saw the price of Bitcoin declined more than 80% from its all-time high. This trend has been closely followed through the bear markets. Despite the brutal crash in the last couple of days, Bitcoin is still less than 70% down from its November all-time high. Given this, there may be more decline to come if it was to follow this trend. However, there is another trend that lends credence to McGlone's prediction. This is the fact that no matter the decline, the price of the digital asset has never fallen below the previous cycle peak. Given that Bitcoin's last peak was a little under $20,000, the bottom may indeed be in if this trend is held. One thing to note though is that the present market has been deviating from previously established trends. It had begun with the multiple bull rallies of 2021 and now has carried into the bearish market of 2022. So, maybe there will be more breaking of historical trends to come. Saylor, now its ideal entry point for Bitcoin, BTC. Gnox, Gnox, price surges by 60% during pre-sale phase 2. Saylor has long been a fan of Bitcoin and the wider crypto space. He believes digital currencies are the future. So much so, he put his money where his mouth is. His company, MicroStrategy, reportedly has a huge holding of Bitcoin, worth hundreds of millions. While Bitcoin has had a tough few weeks, he's still bullish. And his sentiment on the long-term viability of crypto is great for the market as a whole, including a range of other interesting projects like Gnox. Saylor still thinks BTC could hit $1 million. In the recent market downturn, many market analysts have predicted that if BTC goes under $20,000, Saylor's BTC holdings could be margin called. Others have argued that this is misinformation, and the actual figure is much closer to $3,000. Or that Saylor would find the funds to prop up his investments if he had to. While nobody is suggesting you should borrow to spend on crypto, Saylor is still confident about digital currency and its bright future. He actually thinks that if BTC doesn't hit $0, it's more likely to hit $1 million per coin. And while this might take a few years to realize, he isn't in it for the short term. So much so, Saylor has proclaimed that short-term volatility should be ignored. If you believe in the long term, then simple price fluctuations shouldn't matter. When MicroStrategy adopted a #Bitcoin strategy, it anticipated volatility and structured its balance sheet so that it could continue to #hodl through adversity, Saylor recently tweeted. He's still bullish on Bitcoin. What does this mean for Gnox? Gnox has been enjoying incredible recent success at a time when much of the rest of the crypto market is struggling. And for good reason. It's a truly innovative project that aims to democratize crypto investments and put DeFi staking benefits in the hands of both regular and institutional investors. Those investors have previously been hesitant to invest in crypto, but still want to earn good passive income. With Gnox's unique treasury of funds, which are then invested into other projects on holders' behalves, Gnox users get just that. Passive income returns with none of the headaches, and none of the required technical knowledge. That's why Gnox has recently been surging in popularity. And this surge could continue as Gnox moves through Presale 2 into Presale 3. More coin burns are also planned to help limit supply. Getting in early with Gnox could be key. Conclusion: Saylor is still confident about the future of crypto, and this confidence could pay off with Gnox. The first truly democratic DeFi investment platform that gives real people real passive income.